Hi, and welcome to Random Rogers Big Picture for the week of June 28th, 2009. One thing on the agenda this week is an article that I saw on Seeking Alpha called ETFs for Retirement. It's kind of like one of those money magazines, 10 stocks for the rest of your life, one of those types of titles. And I read the article, and of course, the article had nothing to do with ETFs for retirement. The article was about retirement, sort of, and it mentioned some ETFs. So I guess the editors over at Seeking Alpha took a little liberty with the title. Anywho, it got me thinking, though, about the whole concept of, let's pretend for a second that the article was about ETFs for retirement, with the implication being you could put them away for the rest of your life type of thing, or I don't know if anyone really reads those magazines anymore, like Money and Smart Money and whatever else is out there, but let's pretend for a second they do, and let's pretend for a second that they still write articles like that, or maybe, those types of articles you see every now and then on whatever websites you read that are close to mainstream media type stuff. One thing about them, and that's really the focus of this post, is the notion of ETFs for retirement, or 10 stocks forever, that type of thing, is just simply not how life works. Think about how I'm starting with this. I'm basing it off of an article called ETFs for Retirement. 10 years ago, there effectively was no ETF industry. There was SPY, MDY, I'm pretty sure came out, and the webs, and then at some point the sector spiders came out, and maybe my timeline is off by a couple of years. Maybe it was 1996 when there was only 2 or 3 ETFs. But you get the idea. 10 years ago, there essentially was nothing in the way of choice for ETFs. That's the bigger takeaway. It's only 10 years. And back in the early 90s, those articles, mutual funds for retirement, stocks, those types of articles existed. You saw them every time. And, it's I guess people are suckers. They see an article like that and they want to buy the magazine. And of course, they're always wrong. So the point here is, however old you are, you've got some sort of plan right now for retirement. That plan leads you to some sort of allocation, some mix of products. I would imagine, I don't know, but I would imagine most people have, mostly mutual funds and ETFs, and maybe a couple of stocks in there. It's a reasonable thing. All that even opening toothpaste to speculation commentary that we've had in the last couple of weeks. That's probably what most people have. Mostly funds of some sort, and a stock or two. And for the foreseeable future, and assuming you're not a trader, chances are that for the foreseeable future, you think the mix you have is pretty good. And it probably is. But, at least I hope it is. But, 10 years from now, what's to say that we don't have a completely different something or other? I would say relative to the mid-90s, ETFs, in terms of what they have become, are a completely different something or other than what existed. I'm going to take credit for something. I kind of always thought they would be a real big deal. But it's not like I had the idea. It's like they came along and it occurred to me, hey, they can do this for everything. And so I kind of thought it'd be a big deal. I'm not smart enough to know what the next big thing is, but someone else out there is, and they'll create it. I have no idea what it'll be, but, to the extent ETFs may be beginning to marginalize mutual funds, and in terms of assets, there's really not much of an argument to make, but you never know. I mean, it's taking a bite out of the industry, and it certainly is much tougher to find, X Morningstar. It's much tougher to find commentary about mutual funds. It seems like, and maybe I just have some sort of bias, but it seems like most of the commentary out there skews in favor of writing about exchange-traded funds. I think because they're cheaper, and it allows the end user to be the active manager and the asset allocator as opposed to the mutual fund manager. I don't think mutual funds are going away just because, I'm not quite sure how they're going to fit into 401ks. If you look at Index Universe every couple of weeks, they talk about, or Tom Lydon's site, when are ETFs finally going to be in 401ks? Not quite sure how that works unless you change the whole the whole 401k platform and make it like a brokerage account. There are some firms that do this. I know Schwab offers this, and we manage a couple of these for some folks. So, I mean, that would really be a changing of the platform as opposed to including ETFs in the platform. But there's probably plenty there, I don't know. But the bigger macro is ETFs, one way or another, appear to be marginalizing. And so for the next few years, that's great. But they're, as far as this is the portfolio I'm going to stick with, but new things come along. I'm very excited in terms of my thinking that this is really going to open the door to a lot more choices coming. This Peru ETF that's come out, the Emerging Market Infrastructure Fund from iShares that came out, the Wisdom Tree Emerging Market Currency ETF. I mean, these are providing new access. All of these things that I just mentioned are real heavy in obviously emerging markets. In fact, that's pretty much all they are. So if you find yourself going crazy here, you need to balance it out somehow, with like a dollar up fund or something like that, because, what's going to happen if there is a run on the dollar up, which probably would result from a panic of some sort, then all these emerging market things are going to get pasted. And I really don't think you want to go too heavy in them, but the point is it allows for really a wide array of placing your allocations. With these new funds from iShares of late, I've forgotten all about the sector, the EG shares, I've got that right, emerging market sector funds. I think those are fantastic tools. This is all stuff that's come up in the last few weeks. 3 years ago, the choice available was much narrower. I think in the last 3 years, all the choices now available in commodities. It's continuing to expand. And so the idea of ETFs for your retirement, and I'm not picking on the writer because it's clearly not his title, is a faulty premise, and it implies you can somehow rest on your laurels, and I think the new product generation is such that is foolhardy. Alrighty, that's about it. Have a great weekend.